We're going live in 60 seconds here at Mallette-Goring.
He's taking care of that. Yeah.
My presidential address here. We're on the hot seat. We had some elevator music just to serenade you all, and we're ready to go here for our first ever Ask Me Anything Facebook Live. We're trying to get it set up next time to be able to go live to Facebook and LinkedIn at the same time, but we'll share the page and the video afterwards for those of you on LinkedIn. We're ready to rock and roll. So we do have some questions that were already sent in. We also have the ability to send your questions in the chat. I've got Christine Rochon, our operations manager, and Jeff McCausland, our development and project manager, here in the boardroom at 128 Larch, and they'll be facilitating question and answer, or question anyways, as I'm on the hot seat. Here we go.
All right. Thank you, Chris. Did you want to start with an introduction or any disclaimers?
Yeah, let's do that. So I think it's important to mention that obviously, the information that we're giving is an opinion. It's not a legal opinion, of course. You should always consult with your lawyers, accountants, financial advisors whenever you're making important business decisions. Also, for those of you that may already be, represented by a real estate agent or broker, we're not offering, any solicitation of services, just giving information about, the general market, but also just our opinion on, what's happening in the world in Sudbury and the area, applicable to what we do here in Sudbury, but maybe not as applicable to your local market if you're not tuning in from in Sudbury as well. So just a couple of disclaimers, and really excited to try this out and to give you guys a chance to learn more about what we do here at Mallette-Goring, and obviously, the market here in Sudbury as it's always evolving.
Perfect. Thank you so much, Chris. So we're going to go ahead with these questions. They're not in any particular order. It's a pretty good mix. So first one up is, what trends are you seeing in our local market?
Yeah, so just to maybe backtrack slightly, so Mallette-Goring is a commercial-focused, investment-focused brokerage. We do some select residential files. We sell a lot of apartment buildings and multi-unit rental properties, but the majority of the work we do is industrial, commercial, retail, office type work. In Sudbury, we've seen for some time that the market's been quite active, especially for industrial. So obviously a lot of demand with the mining cluster here in Sudbury and the mining services that kind of spin off from that. So the industrial market's been really hot for some time, well before COVID, and even more so today. We've also seen a lot of growth on the investment side, as there's a lot of Southern Ontario and Western Canada investors that are learning more about Sudbury and why it might be a good place to invest their funds with a stable rental market and good local diverse economy. Higher than you'd think average rental rates for a smaller city, and obviously still value in lower prices than in a lot of the big cities. So although interest rates have influenced that in the last 12 to 18 months, and that market did cool a little bit through the last period of rate hikes, we're seeing lots of good activity this summer and a lot of demand for rental properties, commercial, multi-res especially. Some areas of the market are a bit slower, of course. Office leasing has been slow since before COVID, and work from home becoming more of a part of businesses' plans. But definitely in terms of our local market, I think it's been pretty resilient, and we've had quite a bit of strength in terms of small office space, co-work type setup, sole proprietor or small businesses looking for space and not really having a ton of options. So I think that's kind of a quick synopsis of what's happening in Sudbury, but obviously it changes all the time with new news in the local economy, or whether it's public projects that are being discussed to move forward, and obviously the global economy and even nationally here does trickle down to Sudbury, of course.
Sweet. So we're going to kind of keep on theme a little bit with, what are the trends in Sudbury that you're seeing in our local market, and kind of advance into like, what are the average leasing rates you're seeing in Sudbury right now?
Yeah, so that ranges quite a bit, of course,
Yeah.
depending on location, the type of property, and obviously the condition of the property. What we find is that the rates have been on the rise. There's no doubt about that. On the industrial side, we used to always see rates in the net rent range of maybe $5 to $8 a square foot. And we'll talk probably at some point about net leases and what does that mean, and some of the common lingo. I know that was a question that's been asked is, how does a net lease work? But net rent basically is the base rent, and that was ranging typically between, say, $5 and $8, $5 and $9 a square foot. For industrial now, that's upwards of $12 to $18 a square foot, and sometimes even more for newer buildings. On the retail side, it depends on the areas. We find there's still really strong demand in the two main shopping nodes in Sudbury, which would be the north end, like New Sudbury near LaSalle and Barrydown, or Kingsway Barrydown, like where the Costco would be. And then also in the south end near the Four Corners. Those would be kind of the main highest demand areas, and the rates would range, in those areas from 15 to 25 or more per square foot on the base rent. The lower price square foot range, and suburban, south end, close to the hospital, close to the university, could even be into the high teens or more for newer buildings.
Perfect. So we're going to hone in a little bit on the office market. What's happening?
What we've found for a while is that there has been a trend towards downsizing of space, gone to a fully work from home model in some industries like insurance and other places where they're maybe working, just on a computer and on the phone with a client. And there's been some of those big companies have gone to a hybrid or work from home model completely. But we're finding that a lot of the businesses we deal with in Sudbury, whether it's consulting, engineering, in the mining industry, they do still need a physical presence. Maybe it's less space than what they would have occupied before, but definitely there's still demand for office space in Sudbury. We've always found that the downtown market does lag behind suburban office in Sudbury, and like a lot of smaller cities, there are some challenges with us filling space downtown that, whether it comes to access to parking or obviously, clustering of other services, and then also some of the social challenges that we've seen, continue to evolve downtown. But generally speaking, good demand. We don't see as many of the big tenants as we used to. A lot of demand for smaller spaces, and almost no vacancy in the suburban office space in our market for sure.
Perfect. So we've touched on trends in our market, some of the average pricing in different sectors of that market, as well as some office leasing. And so to expand on that, what areas of the market are hottest right now for investors?
Yeah, definitely. I would say it's still multi-unit residential and industrial, especially now that the lending climate has shifted and the lenders are actually a little bit more particular about the types of deals that they want on their books. We're seeing, record-breaking prices on industrial. Some of the sales, even in the last few months, have been well above, what would have been record-breaking prices, into the $250, $300 a square foot range. We've seen, in terms of multi-res, the market cool a little bit since the peak a year or so ago, but still, a lot of demand and definitely a lot of appetite from investors and from lenders looking to fund deals.
Perfect. What are some of the barriers to buying commercial versus residential properties?
That's a good question. So we find a lot of people want to make the leap into owning commercial real estate, and sometimes assume that the entry point and the steps to get into the door, so to speak, are the same as buying your first house or your first rental property. Commercial mortgages are quite a bit different than residential mortgages. We find that lenders are much more particular about the buyer and their history, their credit, and their financial strength, but they're also not just lending to the buyer, they're lending on that property. So the property itself will dictate, the financing terms. So the lender might be more aggressive on a certain asset class or a certain location, and we've actually seen a lot of lenders just completely decline certain types of deals in this market. So that means that, buyers are going to private or B or C lenders at higher rates with more, aggressive terms. And obviously the deals are just trickier to get done. But we do find that the down payment and closing costs is one barrier. Typically buying a rental property in residential, you might need between 5 and 25% as a down payment, whereas in commercial it could start perhaps at 20-30%, and we've seen deals where the buyer needs 50-60% down or more, depending on the perceived risk in that transaction. The interest rates on residential, now are probably settling in the 4 to 5% range. On commercial, we've seen recent deals, 5 to even up to 6, 8, 10%, depending on, again, the perceived risk of the buyer and of the property. Other things would be, commonly required due diligence items like environmental reporting or appraisals that do tend to cost more in commercial versus residential. And just a little more time, between the offer and the final approval. But generally speaking, it's appealing from a landlord perspective to own commercial, and we'll talk maybe about why that is from a leasing perspective and the contractual rights of landlords in commercial versus residential. But it definitely is a situation where a buyer and investor needs to have, a little more saved up and contingencies for vacancies and, the risk of when there is a space vacant, it takes longer to fill it generally, and obviously being able to kind of weather the storm in those cases is important as well.
Perfect. So one term we hear a lot in our industry is cap rate. Can you speak to what a cap rate is, what sectors you might find a cap rate in, and what are some of the cap rates we're seeing in Sudbury right now?
Yeah, we always hear, it's a common question from investors using the lingo cap rate. And just to speak briefly to it, it's basically net income as a ratio to the purchase price. However, how you calculate that ratio or how you calculate that net income it ranges quite a bit based on who you talk to. So what I think is the most important thing is for people to just use consistency when they're analyzing properties. We find some investors, say if they're buying an apartment building, for example, they'll just look at the gross rental income and deduct the basic expenses like the property taxes, the utilities, the insurance, the maintenance, the snow removal, the garbage disposal, the basic required upkeep items. So the gross revenue minus the operating expenses would give you the net operating income. So say the net operating income was $100,000 a year and the purchase price was $1 million on that property. 100,000 would be 10% of $1 million. So in that case, it would be a 10% cap rate. What I find sometimes challenging when communicating with agents and buyers and clients about cap rate is that you might look at one pro forma that includes, say a contingency for a vacancy rate, which I think a prudent investor should have in their pro forma, right? What happens if the apartment is empty for a month or needs renovations, or what happens if the office vacates? So usually we include a percentage, maybe 2 to 5%, depending on the type of property, as a risk factor for vacancy. Also things like property management. A lot of buyers are investing from out of town and they might hire a local property management firm to run their asset here in Sudbury, and that firm may charge between 4 and even 10% of the gross revenue as a management fee. So that needs to be factored into the pro forma. We also recommend putting a reasonable assumption for the ongoing repairs and maintenance, but also a plan for larger capital items. So there might be a roof that needs to be done in the next 10 years. So if it's going to be an expense at some point in the next 10 years, probably allocating a certain amount of funds each year to be able to go towards that larger cost in the future. That should give you a more realistic and I guess a more stabilized anticipated net income to then come up with a more realistic cap rate. So to answer the question, Christine, about what's a going cap rate, it depends. We'll see on the multi-unit residential in like prime location, it might be as low as 3, 4, maybe 5%. And on property that needs a lot of care or is really let's say a distressed property or has a higher risk profile, it might be 8 or more, maybe even up to 10% on a cap rate. So all that to say, it depends.
Yeah, it's a good range depending on the sector and where the property is and how the pro forma is built.
And it's always correlated to risk, right? So the lower the risk and the safer the investment, the lower the return or the expectation for the investor, because they know that it's a safer investment. If it's a high risk property with a better chance of vacancy or a better chance of needing to have large amounts of money invested into it, you would only move forward on that property if you had a higher return. So that you might expect a higher cap rate for that sort of acquisition, right?
Perfect. So we're going to go to what are questions to ask in order to evaluate a rental property or investment?
Yeah, I would say again, it will really depend on the type of property and where you're purchasing. For our market, I think location is still very important. We know that when we post a space for lease at the corner of LaSalle and Barrydown, like for example, we just recently had a small unit pop up on LaSalle, the mall where Little Caesars is, kind of across from the LCBO and the Pat Mario. So when we posted a small unit at that location, we had multiple offers immediately upon posting the space on the market. Obviously in that location, there's a good sense of confidence from an investor that they're going to always have the building full or close to full. Whereas if they're purchasing in, let's say, Levac or Onaping Falls, where there's maybe less demand for commercial space, then obviously you're going to expect to pay less for that property because you're going to get less rent and you're going to have less potential tenants. So I think location in real estate, as cliche as it is still what drives things. I think it's important to also look at the condition of the property and not being not ignoring the long-term maintenance and upgrades needed to that property. I think it's easy for investors to see what's in front of their face and what the current rent and expenses look like, and it looks great on paper, the profits look strong, but if you're not accounting for the furnace or mechanical system that needs to be updated, or the windows that are at the end of their useful life, or the roof that has issues, or the environmental risk and other things, then you're really not getting an accurate picture as to what the real long-term profitability could be for that property. Beyond that, I think it's an issue of just assessing your own risk tolerance and real estate or financial advisor and making decisions based on your situation.
Okay, so follow up to that. Are there a building with heavy renovation needs?
I think more so now than what we were seeing when the market was by contingencies, and a couple with no conditions in their offer. Tradespeople, inspectors, and specialized trades in electrical, mechanical, roofing, plumbing, the key areas, so that someone knows what they're really getting. For example, but I do think that inspections and kind of visually aware of what the physical conditions and risks are is probably the number one.
Let's pause for 2 seconds. I just need to change my Wi-Fi, and we'll get that done very quickly. Thanks everyone for your patience. Yeah. Perfect. I think we're back up and going. So we'll keep cruising here. So the next question, why work with an agent for buying, selling, or leasing in commercial?
Yeah, I think this is actually really a very good question. And we find that a lot of people just don't really understand the role that an agent plays in a transaction. And there's times where it's a communication issue on the agent side to be able to explain the value that they bring to a transaction. And it's not just in finding someone a location. Part of what we do obviously is advertising, marketing properties for sellers and landlords. And, a lot of Mallette-Goring's business over the last 50 years has been representing sellers in the market. But a lot of what we do is also advising investors and tenants who are opening their business for the first time or buying their first rental property. And, the types of situations that we're exposed to throughout any given week or month, allows us to give our clients perspective and to give them ideas that they should be mindful of before they enter into transactions. In commercial, I think it's especially important because, especially in leasing, what's in the lease and what's in the contract is what governs the relationship. Whereas in residential, you have like a residential tenancy act or the landlord tenant tribunal that kind of regulates the way that landlords can work with tenants. In commercial, it's basically contract law. So if it's in the lease and the tenant has agreed to the terms of their lease and what's in the contract, then it's able to be enforced legally by the landlord. I think there's a lot of people who enter into leasing transactions without really understanding the risks and obligations that come with that contract. Only a commercial practitioner who's really living in that space every day, and obviously with the guidance of a commercial lawyer and other consultants behind someone, I think it's important that someone really goes into things with eyes wide open and has the right questions to ask through the process, has an eye on the right type of clauses that need to be addressed in an agreement, and obviously is mindful and knowledgeable about the local market, what's standard, so to speak, or what's the going rate and what are the common negotiating points, for example. Beyond that, I think it's important for, whether someone's buying their first home or their 20th property or their first commercial property or adding to a large portfolio, it's having a team, a board of advisors, so to speak, that includes a real estate broker. It doesn't have to be, us, of course, but someone who's, professional, full-time in their field and knows the questions that need to be asked through that process.
Thank you. Where does the name Mallette-Goring originate?
Great. So Mallette-Goring actually started with 1977 and before my days. But Ed Mallette and Bill Goring were the original owners of Mallette-Goring. They created a partnership, and that's grown over the years to then end up transferring to ownership to my predecessors, which was Larry Gauthier and Jean LeBlanc. And then in early 2020, we took over the brokerage, and it's been kind of a local boutique firm for almost 50 years now. Obviously, our name and brand is more of a regional name. We're not a national firm like a CBRE or a Colliers or Avison Young, but we really are specialized in Sudbury and the area. We do some work in North Bay. We do some work in Timmins, the Sioux, and kind of the towns in between. But I'd say 90% of the work that we do is within an hour of downtown Sudbury.
Perfect. I'm going to give you a little meaty one here. What can be done to assist with development of vacant properties and local eyesores people complain about, like say the old hospital or the brewery? What's your thoughts on that?
We get these sorts of comments often, and I think the first thing I'll say is there's not as much that could be done as people would think. Privately owned properties are owned by investors who can choose to do, to a certain extent, to do what they wish with their own investment. That being said, there are property standards, bylaws, and other kind of local bylaws that can be put into place to hold owners to a certain level of care or standard for moving forward on a project. There are municipalities that have used other tools such as vacancy taxes or other penalties to really nudge people along when it comes to letting properties stay vacant or undeveloped for a period of time. In my opinion, I think it's actually more about creating incentives for developers and creating a climate where it's investment friendly. We hear a lot locally about reduction of red tape and kind of the hoops that people tend to have to jump through to be able to get a bigger project off the ground. And I think we've seen a shift, or we are seeing a shift in culture locally with a new mayor and council, and I think a good energy surrounding let's move forward and find a way for a win-win situation where the developer is able to get a project off the ground, the city is able to increase future tax revenues, and obviously there's ancillary benefits to to everybody when that happens. So I think things like the CIP initiatives, whether it's the brownfield CIP for contaminated properties and an incentive to clean up, former contaminated sites, or the TEAG program, which is basically a rebating of the future lift in property tax values when someone develops a property. There's other incentives in specific strategic business core areas, like whether it's a facade improvement grant or other incentives like no development fees in certain areas. So I do think creating a climate where we make it easier to get to a yes and make it easier for people to move forward on their own projects is the best way to deal with some of these kind of long-standing quote-unquote eyesores in the community.
I'm going to stay in the development lane for a moment and ask, what can Mallette-Goring offer a developer?
What's interesting is we actually, obviously brokerage services is what drives the ship here. And most of what we do is assisting buyers and sellers, tenants and landlords with transactions on leases and sales of properties. So that's by far the majority of what we do. But as a service that's kind of part of that, getting from A to Z, we realize that a lot of the work we do is actually more as a consultant, and we help people navigate things like the local planning rules and zoning bylaws and things like building codes and things like what consultants and reports are needed to get a project from A to Z. So we actually have created a separate arm of our company that does do development and planning consulting, and Jeff McCausland leads that side of things with, obviously some clients that have their own real estate firm that they're using to acquire a property, but they need some local expertise to help navigate the steps and connect the right people with the right services. So I think from that perspective, we can be a lot of help to people. Also as a connector, right? Knowing the right type of lawyer for the right type of transaction, or being able to recommend a few contractors for a certain type of property, or the right accountant for the right type of business. I think there's, because of the diversity of the types of deals we're doing, we're able to, help people just smooth that path from start to finish.
Perfect. Got a really good question here. I think before getting to it, you might want to preface what are some of the different types of leases out there. But the question is, are you better to go with all-in rent or separate CAM? How do you negotiate a reasonable or fair CAM agreement?
Okay. So with regards to the different types of leases, I think that is a good starting point. So in commercial leases, there's generally, I would say, 3 types of leases. One being a net lease, the next being a gross lease, and the third being kind of in the middle, we call it a semi-gross lease. So I'll talk just briefly about that. So in a gross lease, it's basically an inclusive lease. So you negotiate the rent, and typically it includes everything. So if you pay $1,000 a month gross rent, it would typically include not only the rent, but the tenant's share of property taxes or snow removal or building insurance, or sometimes even the utilities are included in that gross rental rate. On the opposite end of the spectrum, being a net lease, there's typically, 3 parts to the rent. There's the negotiated base rent. So you'll see in an ad, it might say $10 a square foot net. So that's $10 per square foot per year. So if it's 1,000 square feet at $10 a foot, it's not 10,000 per month, it's 10,000 per year, so divide by 12. That's the base rent. The second part of that lease would be, well, you'll see in an ad, it might say tax and CAM, or some people say taxes and operating costs, or some people might say TMI, which is taxes, maintenance, and insurance. So that kind of variable portion to the rent, the second piece, is the tenant's proportionate share of the cost to run the property. So that might be, in most cases, property taxes, snow removal, building insurance, general common expenses, like if you're in an office building and you have common washrooms and lobbies and hallways, the landlord typically maintains all that and charges everybody their share of that expense. So if you're in a building where the building's 10,000 square feet and your unit is 1,000 square feet, in that case you'd be responsible typically for 10% of those expenses. So that being, a percentage of the actual expenses, it becomes a variable expense, and typically it would increase over time. So taxes, unfortunately, tend to go up and not down over time. We've seen lately insurance costs going up. We've seen utilities generally going up. So that's kind of a future anticipated escalation with inflation. to talk about the pros and cons, the net lease in a lot of ways is better for both parties because what the tenant is paying is their share of the actual cost to run the property. And what ends up happening is that the landlord is then incentivized to actually maintain the property well because they know that the tenants are paying their share of the cost to do that. Whereas in a gross lease, if someone's just getting their fixed rent, there may be a situation where a landlord would not be incentivized to properly maintain the property because every dollar they spend is actually coming out of the landlord's anticipated profit, let's say. And then on the other side of that, from the tenant's perspective, if you're in a gross lease where you're saying, I like the cost certainty of knowing my rent is going to be X per month and it's not going to be, there's not going to have the variable component to it. On the flip side, the landlord is likely building in some of those anticipated increases into the rate so that they're not at a loss when costs go up over time. So it's, for some organizations, like if they're a nonprofit or they have a board and they need to know what their anticipated operating costs are for the business every year, they might really want to be in a gross lease. Whereas for others, it might make more sense to just pay what the actual costs are instead of the inflated version of that, if that makes sense.
Perfect. So we're getting to the end. We have lots more questions, which I think means we just get to come back and do another Ask Me Anything with our audience. But to end the half hour, do you have any pets?
Do I have any pets?
Yeah.
Well, I have a wife and 3 kids, first and foremost, so those are my favorite pets. And then also we do have a large, lovely dog, Oakley. She's like 70, 75 pounds. She's a brindle lab collie golden retriever mix, really cool, like colored to her fur. She's a really cool dog in that she's very quiet and chill, but also loves to play. So she's a really easy dog to have. She loves to swim in the summer, chase the ball, do all that fun stuff. But yeah, those are my pets in my world.
Perfect. Any final remarks before we close this off?
Yeah, I think this was a cool test. We're going to do more of these. I think we'll end up drilling in deeper to specific topics. And we've talked about bringing on, maybe, doing a panel type discussion or having a one-on-one with someone to talk about a specific topic. I hope this did provide value to those that were watching and tuning in, whether it's live or after the fact. But definitely, it's a cool test drive for us to kind of work out the technology, but also to create a format where we can be engaging more with our clients and potential followers. So thanks so much for having us.